Awesome. Well, welcome to, I guess, installment number two of hopefully many Sunday sessions. Yeah, I don't really know what else to say about that. Thanks for joining in once again and, continuously supporting what I'm trying to do here. And I'm going to try to just continue to do this for as long as I can, at reasonable price points and stuff like that moving forward. As most of you know, the masterclass is kind of going to be where I want to have my primary focus, and it's always been that way. I want to, essentially have my dream clientele, and like why should I do anything else, right? So I just want to be completely transparent, as I've been trying to do this entire time. And yeah, the masterclass is ultimately going to be at the forefront of what I'm doing. So yeah, I'm going to start sharing my screen here. We're going to jump right into it. Let's not waste any time. If you guys can, please just save questions for the end. There's no sense asking a bunch of stuff throughout. I am going to be asking you guys to interact and stuff like that. You'll be able to annotate and do all of that kind of shit. But it's, yeah, just make sure if you know how to annotate, that's great. Remove your shit. Yeah, exactly. I mean, I have a good hang of it now. I've been using it enough, but yeah, like I said, if you're annotating, man, get rid of your stuff after, because I don't want to be fucking around with it. That's the truth. Cool. Let's just jump in. Like I said, I'm gonna be working kind of in this price range over here. And the reason why is because this is kind of a tricky area this week, where a lot of people were expecting, this demand level to kind of produce a new high off of here. This is the 15-minute time frame, by the way. And can I just get a confirmation that people can see my screen in the chat? Yeah. Okay. Cool. I thought so. Awesome. Well, yeah. So I think we were ultimately like reacting. So this is going back to, like, this was last Friday's piece of price that I ended up taking like a 14R trade on the Friday up into this supply level. And yeah, long story short, I mean, let's just kind of rewind this to Monday of this week. So if you guys look at the bottom, it says August 16th, about 7 a.m. I'll just move it up to about, 7:15. It's about when we get on the chart. Okay, who's leaving their markings here? Swear to God, you fucking guys, unbelievable. Okay. No, seriously, I'll get it. There we go. Okay. Ah, man, you know what? I'd love to kick people out, but you guys are supporters, so it is what it is. Just, man, if you guys are using the annotate tool, please, please, please just get rid of your drawings. It's not a whole lot to ask. Yeah, I know, I can see, but I'm not going to be going through the chat and calling people out. Like, I mean, bottom line is, if you don't know how to get rid of your stuff annotating, don't annotate. Okay, don't be involved with it. Admit. Okay, cool. Let's move. If you're late, too bad. Okay, 3:09, people are still getting admitted. Show up on time or don't bother coming. That's the bottom line. Like, I don't have time to waste, and all these people are sitting here waiting. Okay, so let's jump in. For those of you guys that are new and just getting in here as well, like I said, I'm going to be recording all of this. So demand zone sitting right here. We are reacting again. 15-minute time frame is what I use. We've got a supply zone. Let me just draw these out properly. And we'll just kind of move into this a little bit further. So the only reason this is a valid supply zone, it doesn't mean that it's the origin of the move or anything like that, but ultimately we have an unmitigated supply zone that broke a bit of structure, and ultimately the bottom line here, and the thing that matters most for me as a session trader, and hopefully you guys as well, is we're reacting to it. Like that's all that really matters, because we trade reactions. And man, like, that's it. Like, I mean, it doesn't need to be more complex than this. Ultimately, how many people are sitting here right now waiting for a POI to be met, which would be more than likely this guy. This is the demand level. Holy fuck, man. People are still trying to get in here. Okay, so this is the demand level. I mean, I think a lot of people at this point are looking at this demand level as this is the level that, you know, it didn't really even break structure. The one that really broke structure, which, you know, your structure point is in and around, you know, this region right here. Wow, that's not a great line, is it? But you get the picture. This happened after the break. So really, we're looking at like down in here. However, what this is going to provide us, this bit of demand, is more than likely something that we can either trade to the upside, or very simple, you know, give us a demand to supply flip, which then we can start targeting, you know, places down in here, equal lows, mitigated lows, you know, whatever. Like, I mean, personally, I'm not holding trades that long anyways. But yeah, I mean, if you want to, by all means, I'm a session trader, man. I like taking profits out of the market every day because it's the only way to stay sharp and constantly analyzing the market in an efficient manner. Again, in my opinion, of course. Sorry, people are still like getting into the conversation right now. I'm really sorry for you guys that were on time, but unfortunately, we're just going to have to wait for all these people to get admitted in the next minute or so. Okay. So bring this guy back. Demand zone sitting right here. Yeah, so I'm really going to just break down. This is such it's such an interesting concept when you're trading intraday, because you really don't have to fuck around with like waiting for POIs. Take trades until your POIs are hit. Wait for the change of character. If you don't get a change of character or a change of trend, whatever you want to call it, and we just kind of bounce off like this, well, that demand has now created supply that's respected this supply zone, which now we can take trades from to target mitigated demand levels. I don't know whose mic's on, but mute yourself or I'm just going to kick you, man. Okay, cool. Yeah, so demand, this is 15-minute. We're reacting to supply, making a series of lower highs and lower lows. Pretty simple, very basic, very basic stuff. Again, this was August 16th price action, about 7:15 a.m. Pre-New York. So at this point, this is essentially all I'm really looking at. It's very simple. Like, I mean, we're waiting for this POI to get met to give us the reaction potentially, or the break. So could we take trades from supply levels like this on the 1 minute to go down into here? Of course. Why not? Why are you sitting here waiting? You know, you're waiting for what? The thing is if you wait for this, you already have a bias. You're already thinking you're going to go long. And in my opinion, if you wait for this and you don't take trades going into this, you're not going to be sharp enough to really be able to react to what's going on in the market here. Because if we roll over and you were looking for longs here, and you've convinced yourself that a minor break of structure is something to take a long from without breaking some sort of supply level, you're going to be in trouble, man. You're going to fuck up your whole session. I'm going to step down to the 5 in 2 minutes. Just want to talk to anybody who is new that's just gotten in here. We are going to be stepping down the 5 in 2 seconds, but if you are new and you've just gotten into the Zoom chat or the Zoom call, first of all, show up on time next time, okay? Because I don't want to keep repeating myself. I'm going to be recording this, and once I'm done recording it, it's going to go out onto a drive. Maybe tonight, I hope tonight, but ultimately, you know, by tomorrow morning, you guys will have the link. I think it'll be tonight, and if there's problems and for whatever reason you can't get access, shoot me an email. Do not shoot me a DM on Instagram, okay? Shoot me an email and tell me, hey, this is what's going on, and that's it. Do I use the H4 D1 and higher time frame? Obviously, man, I don't know if you were listening at the beginning, but questions will be at the end. But just to answer this, I use the 15, the 5, and the 1. That's it. Please follow protocol here, guys. It's not a whole lot to ask. Okay, so 15-minute POI sitting here. We're reacting to 15-minute POI supply. and this is where price is. So right now, there's not a whole lot more information that we need. We can't really pinpoint a supply level at this point because, you know, we've mitigated here, mitigated here, mitigated here, mitigated. This is kind of unmitigated, I guess, to a certain degree, but you get the point. Everything is pretty well running efficiently on the 15. So when we zoom in, just like a microscope, we're going to see a little bit more imperfections that we can essentially try to trade from. So let me go like this, move this guy over, try to zoom this up like this. Okay, cool. So at this point, we've just broken a pretty major structure point, which was right here, right? Like this is the supply that was sitting here. You could argue that this was supply, 100%, but ultimately the one that I guess started the fail of this demand zone right here was here. I mean, could we come up here? Sure. I mean, there's no reason we couldn't. Again, not really relevant to what we're doing here. So if you were contemplating between these two 5-minute POIs, here's what you would do. You would map them both on a 1-minute time frame. You'd be looking for the confirmation entry to get into one of these. Doesn't need to be any more complex than that. We are pro trend. We are moving to the downside. Pro trend on the 5-minute, of course. I mean, ultimately, we're bullish, but we're trading. If you're just sitting here waiting for price action to come down here, it's a missed opportunity, man. Like you guys, you got to be able to get into trades. So that's how I see it. I mean, I like taking money out of the market every day. I'm sure you guys do as well. But if you don't take these trades, or at least consider taking these trades counter trend, never going to make money. Okay, so 5-minute. Let's talk about the POI. Okay, like ultimately, this is what we're looking to achieve at some point, whether or not we see a change in trend, character, whatever you guys want to call it, whether you're a phantom guy or whatever. Yeah, I mean, ultimately, you're looking for something like that, a reaction to trade, right? So whether it be pro trend, aligned with the 15, boom, change of character, or melt off. The bottom line here is we should probably refine this. We should figure out the area in which we should be able to see some sort of reversal from. So right now, I would say that about 90% of people would say this is the refinement. Okay, that's fine. You can say that. I have my own opinion about it, and obviously you guys care enough to be here and hear it. So my argument is ultimately this candle that you are looking at has already been mitigated by this candle, right? The wick has already mitigated it. So what does that mean? There's going to be something in this wick more than likely, but we're not going to make a larger POI that's not even within the POI that we're looking at. So this is what refinement is. We're not trying to expand. An expansion would be to take this level right here and go like this and create a zone that is actually larger now than our POI, because now technically our POI starts here and ends here. That's not a refinement, that's an expansion. So what are we going to do? Very simple. How do you refine something? At its core, how do you refine something? Well, you got to zoom in, right? So let's zoom in. 1 minute, exactly. Really, really simple. Now, before we get into the refinement, and I don't want anybody to mark anything up just yet, I kind of want to talk about how we got to this POI. And the reason why is it just gives you a better idea of why this POI holds relevance, what to expect when it actually happens. And if you guys are first comers or first timers, coming to a webinar, I preach about, creating a narrative for yourself and really just kind of talking things out, understanding what price is trying to tell you, where do we need to go to collect orders. And I think the best way to do that is if you're in a POI or expecting a POI to get hit, then you need to be able to understand why this POI holds any value at all. Otherwise, you're just going to mark every single order block up, or whatever you want to call it, demand zone in this case, and expect something to swing for the fences and all of a sudden take out the 15-minute high. And that's just oftentimes not the case. So let's talk about this. Here's the high. Okay, here was the high before all this shit happened. If you think about this, The high has to essentially respect this low, right? This is where demand pushed through, okay? Does it mean we need to come down here? No, but it means that we shouldn't go lower than this. Otherwise, guess what? Now we're looking for supply trades, right? Simple. It's just constantly adapting to market conditions. So let's just talk about this, okay? Like I said, the high is here. We've now broken from this level. Guess what? Respect demand, push higher, okay? Same thing over here. Now, this ends up getting refined. It ends up being this inside bar here, but this is actually a 5-minute, I believe, if I'm not mistaken, from last Friday. Sorry, 2 Fridays ago. Let's go to the 5 and get lost in price action a little bit. Okay. So yeah, there's the 5-minute. And then this guy right here ends up being this right here. Now, if you think about this again, we were just kind of talking about partial mitigation and these kinds of things. So ultimately, the move that broke structure, we could argue that was this. Okay. Now, this candle right here is within that candle right here. So let's look at this and now really refine to something like this. Now, this candle has been penetrated by this candle. So what does that mean? Well, there's not going to be any resting orders. And of course, this is wall price. Like if you can just imagine that price did not exist here and all we had was this little bit right here. Well, now you could say that, okay, well, demand technically actually kicked into the market at this level because we haven't actually tapped into the wick. So let's go to the 1 minute, right? Let's go like this, zoom over, and there you go. So now you have the refinement and you've realized that it's actually just this inside bar. Has it been mitigated? Partially, yes. But this is off of a 5-minute POI. So this is, kind of juggling between 2 timeframes to really just understand what price should react to. And again, we're going to be bringing this forward into the actual price action that we're back testing. This is just about really practicing before the session and understanding why this whole POI makes sense for any kind of a reaction. So we push forward, okay? We've broken supply from here. Where did we break supply from, right? This is the supply that broke this little demand zone, right? So when we break above it, what are we expecting? We're expecting to tap into here, right? Same thing. The whole idea of me showing you this is to show you that we are going to constantly mitigate our demand to push higher, right? Push higher. Where do we push higher from? Right here, right? Okay. So now, agree or disagree, we've now broken the high. We've come down, right? We've tapped into demand again. Okay, and what have we done? If you didn't take this on a limit, very simple. I want to ask you guys, in this price right here, okay, where was supply and control from last? You can mark it up. Bingo. Done. 100%. Super, super easy to see. Guys, please eliminate your stuff. Thank you. So if supplies and control from here, okay, that would mean that demand was in charge from here, right? So if that's the case, let me just get rid of these drawings. If all you could see in price was up to about this level right here, where would you be placing your demand zone after we broke this level? %. 100%. Okay. Eliminate your drawings, please. Oh. Like this, I keep fucking doing that. So clear all drawings. Okay, so if that's the case, that's no problem. That's great. That's exactly what we're trying to do here is just figure out what's going on with price. So do you guys agree then that this looks like it could possibly be a refinement, right? I'm not sure what you're drawing over here, dude, but we'll get rid of it. Clear drawings. Stop drawing, please. Okay, so ultimately now we have a POI within a POI, right? Like a refined POI. So where this becomes beneficial to us is that a supply as well? Well, not really. The reason why, so like, let's look at this. okay? Demand, okay, so we broke supply from this demand level, right? We produced a reaction to the demand that then broke structure. Make sense? If we break this, we know we're going to break this. This is the most recent supply zone. Cool? Okay. So let's move forward here. So again, guys, I'm not answering questions right now. Like I said, I will answer questions at the end. This is to let me talk about what's going on here. So we can agree that, you know, we could actually probably put this out to here. This is kind of like our refined POI. We could factor in this WIC. Why? Well, it's not really been mitigated. You could argue that it's not, or you could just refine it to this. Totally up to you guys. Ultimately, why this holds any kind of relevance is, let me just move this all the way over. The whole reason we did this was because this never ended up getting tapped into, right? So when we came up into supply, okay, we've never tapped into this. So would you agree or disagree? I mean, rhetorical question here, that there's going to be resting orders there. Of course, there's going to be resting orders in there, right? It's unmitigated demand. Now, is that unmitigated demand going to be enough to break a supply level in more recent price action that we're going to be looking at right now? Well, that's to be determined right now. We're going to look at how we could formulate trade ideas. So this and go over like this. Sorry for having to make you guys sit through that. Okay, so we got the POI, right? We got the lighter blue POI, and then we got the refined POI. So at this point, if you're a session trader, here's what I'm looking at. Okay, if you're a swing trader or if you're a day trader who waits for POIs, would you agree or disagree that this is a missed opportunity if you don't take shorts down to here? Like, that's like, if you're not taking shorts from this level right now down into here, it's a missed opportunity. You don't have to take pro trend trades. Technically, we are heavily counter trend in terms of, you know, the 15-minute. However, the 1 minute is printing lower highs and lower lows. So why wouldn't we capitalize on that? That's the beauty of the lower time frame is, shit, man, wait for the POI and then just target unmitigated supply levels on the way up. As it produces reaction, take scale-ins, right? Follow order flow. That's all it is. Thank you, Pete. So I guess let me formulate the narrative, if I will, since I just absolutely have a kink for this at this point. Okay, what is the, so let's look at this, okay? Demand level, okay? Really, like, and this is, you know, not refined whatsoever, but look at, this is demand, right? The reason I can call this demand is because from this level, the origin of the move that broke this structure, okay? We've swept liquidity, we've produced a high, and we've come down, and now we've broken down from here. So ultimately, on a higher time frame, supply is in control from here, right? Right now, supply is in control on the 1 minute from here. Why? Because this is the candle that took out the low. So in terms of mitigation process, if we were to come up to here, we tap in, we break the low, okay, supply is still in control. So worst case scenario is you put a limit order on this, we break down, we start respecting demand, guess what? You got a break even trade, okay? And if we pop our head above here, what are we doing? Flipping our bias. Why? Because POIs don't need to get met when you think they need to get met. It's all about reacting to what the market is giving you. So that's it. Like, I mean, shit, if we're, look at, if we're in like a higher time frame supply zone sitting like this, you can't take this trade anyways on the demand level. Why? Because supply is in control of the market. So you got to be able to understand what the process is here and having realistic expectations of the market. So right now, you'd be really silly to not take supply trades. So I guess the question is, would you be comfortable taking a limit order on this? Yes? No? I think you'd be, I just personally think it would be a missed opportunity. Even if you took an L on this, it wouldn't matter. Why? Because you would understand that there's a change of character happening. What could you target? Relatively equal highs, right? We're not looking to break the 15-minute high. We're looking to take some fucking profits. If you guys have unrealistic expectations and you think that you got to hit an ADR trade every single week, let me tell you, you're going to have so much missed opportunity in your trading career. Take the 1 to 5s, take the 1 to 7s, make them make sense. That's what it's all about. So let's put an order on this, okay? Just to show you the process, right? And if we get stopped out, who cares? It's a back testing session. This is the whole idea. We want to understand what the money is trying to tell us, right? So let's switch this up to supply. Doesn't mean we'll get tapped in. It just means that, like, if I was looking at price action right now, where would my order be? Where's the most recent unmitigated supply that broke a demand level? It's right here. There's only two people in the market. There's supply and then there's demand. There's nobody else. So anything else is literally just your emotions. So here we go. We know that we don't have to target this level. We could target this level. Why? Because this is where demand is, right? Are we going to see a reaction when we tap into here? Yeah, but it's more than likely not going to break any kind of a supply level. It's going to produce some sort of relief. And then once we tap in here, it's going to provide a supply level in which we can break, right? And go to the upside. Follow the money, expectational order flow. So right now, let's go. Let's see if we get tapped in. We may not, but if we do, we're on a pro trend trade in terms of the 1 minute. Okay, so now so I want to know which one of these order blocks, now that we've broken structure, okay, which one? Put a check mark beside one. Which one would you keep your order on? Okay. So there's no right or wrong. It's the same one, in my opinion. The reason why, okay, let me talk about why I think you should consider the top one. And would you guys agree or disagree, put a check or an X, that on some sort of a lower time frame, these are relatively equal highs? 100%. What do we know about equal highs? There's liquidity above it, right? It's simple. It's simple. And here's the other thing, okay? Even without that liquidity, even if you didn't catch that these were relatively equal highs, this is not an order block. This inside bar candle is not an order block. Why? Because the wick has already mitigated it on the previous candle. The resting orders that were sitting at this level, okay, have already been taken by this candle. And that's the result of that is this break of structure, right? So if you can think about the mitigation process, these are the details. Like, these are the details you need to be able to see. If you see a wick penetrating into your picture perfect order block, it's already been mitigated. If you honestly think that it's going to tap into here and run, it's just a no. It's just a no. And the reason it's a fucking no is because we got relatively equal highs and we've already mitigated it. Hopefully that makes sense. It's inducement. A lot of you guys got fancy words for inducement or whatever. Like, here's the bottom. Like, don't even think about inducement. Don't think about liquidity. Think about this in terms of, okay, if we've already visited an order block and we've been able to push away from that zone, the chances of us tapping into this again and running a lower low are not good. They're not good at all. And the reason we are able to see this as not a change of character is because supply took control of the market from here. Nothing's changed. If it was not mitigated, good question. If it was not mitigated, here's the thing. Would you feel more comfortable, and you guys can do the check marks again, would you feel more comfortable if this wasn't mitigated with two little equal highs like this? Or would you just feel more comfortable waiting for this? Because here's the other thing is we're going to produce a pullback, okay? And when we pull back, be fussy. The whole thing is be fussy with what you like to take as trades. You don't need to take every single trade. If you're doubting this, that it's going to hold, and it means that you have to keep your entry here and then your stop loss here to cover it, and then all of a sudden, or you just aggressively manage like this, you get stopped out, and then the trade runs the opposite way, you're going to be looking for longs right here because you're going to be on the wrong side of the market. So the extreme in this case is more valuable, even if it wasn't unmitigated. So again, subjective, I understand. That's my thought process. I personally like the extremes more, not because they're extremes, but typically the origin of the move is always going to be more powerful. And if you need to get a little bit more insight and just understand what's going on, zoom out to the 5 minute, see if it shows you anything. I usually set a timer, you know, every 15, 20, or 30 minutes, whatever it is, okay? Set a timer on your phone during New York or London, whenever you trade, and say, okay, every 15 minutes when my alarm goes off, I need to check the 5 minute to see if there's anything there. It's little tricks and tips, man. You know, take them with a grain of salt. I don't really care what you do with them, to be honest. It works for me, it works really great. And if you're like me, on the 1 minute, very easy to get lost in the sauce. So let's play price and see what goes on here. So my order at this point, I'm keeping my order there. Does not mean I'm going to get tapped in, but it means that if I am more comfortable with, given the mitigation right here, you know, we'll call this inducement, or we'll call it relatively equal highs on a lower time frame. Okay, so play price. Okay, so start to pull up. Okay, and we crash down. So now this is where things get interesting and subjective. Okay, where's your order block right now? Perfect. I like it. I like it. I would 100% take this one. Reason why is, okay, a lot of people are scared about wick breaks, okay? Now, this is not going to be a sweep. And the reason it's not going to be a sweep is because the only time we really sweep is when we have equal lows just before a demand level, tap into something like this, and then we go, right? Does it mean it won't be a sweep? No. I mean, I'm just talking, you know, statistically, I guess you could say, more than likely it's not going to be a sweep. The reason being is because if we saw this as a supply that was failed, we've run the high, then technically, shouldn't this demand level hold? That's like the only job that demand level has. So if we've crashed through that and targeted liquidity underneath, very simply put, supply is in control from here. Okay, so guess what? This level, no more good. that's it. I mean, this level, if we come up to this level and we break this level, we're looking for longs. Why? Doesn't mean that we're going to be swinging for the fences, but look at, we got an unmitigated wick that sits here. We got an unmitigated order block that was the origin of this break. You know what I mean? Like, think about things logically here and just see, you know, where is the logical place to go to collect more orders if we have a short-term change of character before tapping in to come back down to then create another change of character to go to the upside, right? So start the narrative. Those are not 50K. Let me just see what people are saying here. What if it wasn't an extreme first line? Do you need to see a clean imbalance? I like to see clean imbalance. I mean, technically we have imbalance right here, right? If we broke the lower and touched the upper one, wouldn't demand be in control? No, I don't think so. If we broke the lower one, well, we broke the lower, right? Demand is not in control here. There's no way for demand to be in control, because if it did, it wouldn't have gone past this. We've broken a supply level, pushed up, and demand failed. Anyways, I'm going to answer these questions a little bit after. So I guess the bottom line is yes or no, would you be comfortable putting a limit to target this level from here? Okay, interesting. Interesting. Okay. Well, I guess the only way to do this at this point is to just kind of show you. And I could be wrong. It's very possible. But ultimately, the level that needs to break here in order to form a change of character or a change in trend is this level here. So if supply is in control from this level, I'm not looking to take trades from up here. Again, personal preference, that's all. Okay, so we can just move this guy over. Let me just get my supply level mapped out. Okay, cover the top, or the high rather, and target here. So 1 to 5.4. Cool. Or 5.14. So that's good enough for me. That's awesome. This is, again, this entire trade idea is built off of the idea that once we hit this POI, we will either see a reaction that breaks demand, or we're going to see a change in trend, right? That now creates new demand to then target something like this wick, something like this, and we'll look at the higher time frame, like the 5-minute and stuff, to be able to get targets if that's how it plays out. So right now, let's just play price and see if we get tagged in here. So it looks like we would have, yeah, at the beginning of the block. Oops, like that. Okay, and play price. So here's where management can come in. You know, I would move to break even pretty well at this point. Like, I mean, you may get taken out, but ultimately, as long as there's no clear order block that's close by, which in this case there kind of is, but because we're expecting demand to take over in the short term, you know, supply is technically in control from this level. This has already been mitigated by this. That's what tagged us into the trade. So really, this is cutting it pretty close before kind of melting off. So you could be aggressive. You could literally just lock in, like, yeah, literally at break even and risk getting taken out on spreads, or you can let it breathe for a few minutes. So totally up to you guys. Personally, I would probably lock it in because I'm anticipating a larger move shortly. So come up. Okay, didn't quite touch, still didn't quite touch, but again, just to demonstrate the idea behind this, right? Okay, and then we get the push away. So once this low kind of gives way, is more than likely where I would consider getting my stop loss at break even, but there's no real wrong answer. It's all about really protecting your capital at the end of the day, and as long as you're with a zero spread broker, you shouldn't have any problems. So at this point, you can see, you know, there's maybe some level of demand within this wick. We've shown a reaction. We are now reacting to a supply level. So at this point, I would be definitely managing to break even. If not, potentially just above this high right here, provided that this candle breaks the low. Again, this is our first trade for the day. We're just trying to dip our toes in the water, essentially. Even if we take a break even, we're trying to understand what's going on in the market. That's the bottom line. You need to be able to, you know, you want to learn how to ride a bike. I say it all the time. You got to get on the fucking bike. So if you're not taking trades, how are you going to understand what's going on? Okay, so we get the push. That's perfect. At this point, you know, managing just above here. You know, supply is in control technically from this level now, because this is the level that broke structure. This has already technically mitigated this. I don't give a shit about your 50% rule, your 25% rule, whatever rule you want to pull out of your ass. The bottom line is we've tapped into this candle to already facilitate this move. That's how I think about it. Simple terms. Okay, push price. Okay. Again, you could have been managing just above this guy, still be in the trade, and get the push. Okay, so trade number one complete. Why? Because we just followed mitigations. This is simple. Demand should have held from here, right? We broke a supply level here that pushed up. And if supply was truly in control of the market, or sorry, if demand was truly in control, this level needed to break this supply. Did not happen. That's why we took the trade. So we're up 5R. Boom. It's literally pre-New York right now. I mean, I wouldn't have taken these trades. I'm just showing you from a backtesting standpoint that if you were on pre-New York or end of London, just to be able to show you that these things are available. Neil, you consider a wick break. I thought in the previous Zoom you said a candle close, not a wick. Okay, so there are circumstances where wick breaks are okay. And in this case, if you can think about this in terms of supply and demand, of course, you can see that the demand level that broke this supply was here. So if we had a wick break, would you agree or disagree that demand is not respected? Exactly. Pro trend, wicks are okay. They are subjective. Do I feel more comfortable taking candle breaks? Absolutely. Absolutely. I'm not going to be the guy that tells you I'm some sort of magician and I know when every single move is going to work out. But what it does mean is demand was in control from here, right? Because we broke supply. If demand fails with a wick break, demand fails. It doesn't matter if the candle closes below it or not. You know, you go down to a 5-second chart, there's a closure. You know what I mean? If you you want to go searching for it, you'll find it. You'll find what you're looking for. So that's how I'm looking at these kinds of things. Yeah, in terms of demand being broken. Otherwise, we should have just rocketed through. Cool. Okay, so now ultimately, do you consider mitigation at wick or the whole candle body? Draw it out, Viknesh. Show me where you're talking about. Well, I would use the candle personally, right? Because really, if you were on a 2-minute time frame, this would be your order block, right? Like this entire thing, and this would be mitigating about 25%. There's a lot of things that I just do automatically at this point because I've been doing this for long enough. And it's, again, not to inflate my ego or be that guy. It's just there's a lot of things that I just consider automatically because my eyes have been trained to look at this. So when I look at this candle, I'm taking the whole thing. Why? Because this is the up move before the down move that broke structure. Cool. Okay, we're in demand. Where's supply got to break from? 100%. 100%. Why? Because that's the supply that took out this low, right? Simple. Okay, so if we start respecting supply right here, could we take a limit order from here right now? Absolutely not. We're in demand, right? We're in demand. We don't know what's going to happen in here. Okay, so what do? Well, let's map out supply, right? To understand what's going on. So at this point, okay, like these are, again, they're 1-minute candles. Everybody thinks they happen really quick. I mean, fuck, they take time. They take their time to do what the fuck they need to do. Let's go to the 5-minute and let's put some scenarios because we want to be able to have targets on both sides of this, right? So look at how heavily bearish we are, right? We're falling off a cliff here. So ultimately what we're looking to do is, okay, if for some reason we break, let's say this entire demand level that we have mapped out right here, where should our targets be? If you guys want to just draw them out, if we break demand and we're looking to take shorts, where are we going to target? Okay, yeah. Mohammed, I like yours. Miguel, I like yours. Yeah. I mean, bottom line is target the first unmitigated demand level, because you know that you're going to produce a reaction at the next one, right? You're going to have to deplete whatever demand is left in that level. And all that does for you is, okay, let's say this is the next demand level that could potentially hold. Okay, let's map that out. Well, guess what? If you break this demand level like this, we pull back up and we mitigate, say, something up here. We take our trade down to here. Well, guess what? If we produce another reaction that breaks here, then we just keep taking these down. It's like taking the stairs. Ding, 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 all the way down, right? So yeah, like, I mean, just don't have unrealistic expectations. Once we achieve this level, mark out your next ones, right? Don't be scared to take profits. Don't be scared that this thing blows right through this. And then you say, well, I could have made 15R and I only took 7. Well, if this would have reversed and you would have taken a break even, and then all of a sudden it goes this way, you're taking a long position when really all we did was mitigate supply, and then you take an L, well, You know, like, what's the difference? Take profits, man. That's what it's all about. You'll never go broke taking profits off the table. Okay, so we got a target here, right? So let's look at the top side and have this scenario weighed out now. Where are you guys looking? So think about, exactly. Pete is my guy over here. He gets it. He gets it. Why is that a level that matters? Okay. So yeah, exactly. It's the only thing that, like, we couldn't take this, at least on this time frame, because this has already been mitigated. This is the origin of the move, right? You know, we've swept liquidity, but we've already mitigated. So the only place that's unmitigated at this point is, okay, the unrefined would be this guy, right? You would be taking this whole candle, and then you could say, okay, well, the only part of this candle that has resting orders is in the wick. Simple. Let's go to the 1 minute, see what's going on. I mean, that's pretty easy. We got resting liquidity, built up mitigations. We have cause for price to move up, because what does it mean? Like, what does this equate to when all of these are mitigated? It becomes liquidity, right? Because if there's no resting orders left after the mitigations, it's going to be pretty easy to move forward. There's nobody, because nobody in their right mind is taking order blocks for shorts that are mitigated already. So what does that mean? Pushing up. Now, again, we need to break this. That's what needs to happen first, right? Okay, let me clear these drawings and get rid of this. Cool. So we have targets on both sides. So what this essentially means is that when you have this perspective of, okay, it doesn't really matter what the bias is, whether we're pro trend, counter trend, the bottom line is we break up, we have a demand trade, we break down, we have a supply trade. This is how you need to think about the market every single time you show up, because otherwise, man, you're going to get tossed around like a fucking ragdoll. And if you're trying to balance this with a 15-minute POI and then a 4-hour bias, and like, that's a lot of variables. That's a lot of things to have to worry about. So again, my opinion, I'm not a bright guy. I'll say it. I've said it so many times before. Never went to college, never went to university. Yeah, you could look at that too. But really, here's the thing. Would you agree at this point? So think about this, okay? This is where refinements on the 1 minute kind of come in. Ultimately, if we break this level, we're not expecting any of these to hold, okay? Because demand will be in control of the market. So what this means is, okay, even this wick is very conservative. And the reason why is because the move that swept liquidity and then broke structure is technically this candle, right? That's all mitigated, right? So if we come up, think about this in terms of, and this is how you have to form it. And this is why I say talking to yourself and talking to yourself through this entire process is so important, because, okay, let's say we have the idea of us coming up to here, okay, and mitigating this. What's that going to be? Right? What does retail love? Not to condescend retail, but this is how the market operates. If we come up to here, is there liquidity above here? Of course there is. There's tons. What do retail traders love? It's simple. They want to trade the double tops, man. It's so easy to see it. So by that same logic, could we potentially go here? Let me just get rid of this shit. Let's go like that. Okay. Get rid of this and this. Okay. So if that's the case, wouldn't this be very similar? If we had to come up like this and we tapped in and then we pushed forward and then we pulled back, wouldn't that be the same thing? So when you start to think of these things and you're starting to provide a bunch of liquidity off of unmitigated supply levels, what does this mean? Well, more than likely, this looks like it's going to be a potential for a change of character, right? So then you got to think about the reaction points in which we can take trades. So, and potentially take counter trend short trades if this ends up reversing. So if that's the case, let's just map out this some unmitigated supply level at the extreme, okay? And then I'm just going to keep this one on here because this is the one that most recently, we'll call that the decisional wick that broke structure. This is the origin and the decisional. But like I said, if we come up to these levels, more than likely, we're going to have a lot of liquidity built up to the top side. So if we know that going in, which again, you're getting like, you got all kinds of time to sort this, narrative out. Would you agree or disagree? Where would be an order block on the left-hand side over here that would be just above a liquidity line? You guys want to draw it in? Bingo. Does it mean we'll go there? No, but it does mean that if you could at least see that and you could understand that you're going to be ahead of the game, because what's the market only collects orders, right? Like that's all it wants to do. So it doesn't matter, who's right or wrong here. You're not going to be having limit orders on these areas to potentially take supply trades until we see changes of character. So if you have all of these mapped out, then it's very easy to take trades in either direction. That's all I'm trying to illustrate here, okay? And again, we don't even know that we're going to come up here, but if we're prepared for both sides of it, pro trend, the next area that we're going is down here, okay? As long as we respect supply. Everybody on the same page here? Give me a check mark if we're good. Cool. Awesome, thanks. I just need my daily dose of validation from you guys. I don't know what I'll do without it. I'm just kidding. Cool. So supply that needs to break right there, right? If we break down from here, that's where we're taking supply trades from. Cool. Have a narrative for both sides. We're going to lose out. Okay. Tapped in. Okay. Starting to push away. So on a lower time frame, there's demand levels in here. Yes or no? It's the same logic as this, right? So like there's demand in here. If we sweep below it, it's a break of structure, right? It's a break of structure. So we got to wait for demand to fully fail before we can take supply trades though, okay? So right now we are respecting, but if we respect demand and push forward, okay, cool. Let's play. Well, I think that's the telltale. I mean, at this point, if you're not considering longs, you're not going to take them, of course, until where do we need to break in order to take a long here? Yeah, cool. Thanks, guys. Yeah, let's play price. What do we got here? Right? We got cause for price to go higher. What do we got here? Built up mitigations. If you're not on the long side of this at this point and you're looking for shorts at this level, holy fuck, are you going to be in trouble? But this is how you learn, right? You're not going to learn unless you take losses. So let's just do this. Let's play price through. Okay. Make this make sense, right? Okay. Come down. Okay. We've mitigated part of the candle, right? And that's given us the push through. Okay. So at this point, exactly right now, where are you looking? 1000%. 1000%. Okay. It's the only place that we could look. A lot of people, okay, and it's not wrong, but it is wrong, in my opinion, would be looking at this level. Okay, that's fine. You could, but here's the thing. If you take, honestly, if you were to take a trade from here, okay, with this order block, where would your stop loss have to be? So wouldn't it make more sense to just take the risk and come down here, get a higher risk reward, at least get a good reaction from it and break even right away? Like, Man, and I think this is where a lot of people, get really confused as to where, and here's the bottom line. If you need to factor in this wick to be able to give yourself the justification to get into the trade, then just take the trade from here. You don't need to be fucking screwing around trying to take these decisional order blocks. It's not about always taking the extremes either, so don't get it twisted. That's not what I'm saying. I'm saying just be smart about what's going on. You're able to read the chart this proficiently. Take the chance. Okay, demand right here. Now, are we taking the wick or are we going to take the 50%? This is a decision for you guys. So hold on, I'm going to write it here. So 50% or the entire wick. Cool. Okay. So let me tell you why I would take the 50% of this one. Okay. Does not mean it's right. So please don't get this twisted. Why I would take the 50% of this wick is because the wick comprises of more than 50% of the overall candle size. Okay. These are my rules. This is written in ink on my trading plan. That is the reason I take these, and I take them day in, day out. And sometimes it means that we tap into this and we run. And I just want to show you that, and whatever happens, this is how I would be taking it. Next unmitigated supply level is right here. So if I miss this trade and this produces a reaction, big deal. Just taking it like this, right? I don't care about missing out on 3R because most of you guys know, like 15R days are a pretty common thing in these parts. And the reason why is because I just adapt to market conditions. And that's what you guys should be doing. So now with that narrative instilled in your head, would you take the 50% or the wick? You don't have to change your mind, but I just want to know where people kind of sit. Okay, cool. No wrong answers. Okay, not a big deal. Oh shit, what's going on here? Okay, cool. Let's go like this. And yeah, so just to reiterate, the only reason I would take the 50% of the wick is one, it's in my trading plan to do so when the wick is larger than 50% of the overall candle. Okay, doesn't mean I get tapped in, but I'm going to do it that way. Okay, right below the 1 pip stop. If you have a good broker, zero spread. Where are we going to target? I mean, there's no wrong answer here. But wouldn't it make sense to take the most recent unmitigated demand or unmitigated supply that broke structure? I mean, this is not going to happen right here. We're looking at the apex of the move. Okay. So where do you want to target? Do you want to target here, here, or here? It would make sense to target the most recent unmitigated supply, right? Because we don't know that we won't see a change of character from here, right? There's no guarantee, but there is a very high probability that we will come here before we do anything else, right? So if you take profits off the table here, here's what, let's get paid. Because here's the thing, if you come up to here, and you start to see bits of structure getting broken to the downside, let's say we do something like this and we start breaking structure here, well, guess what? If you've taken profits here, you're already looking for shorts to target the equal lows, right? So that's the difference between adaptability and marrying your bias, because you come up to here, we start pulling back, no matter what, you're like, I'm just going to keep it at break even because it might just come down to this level, mitigate something. And then this whole session is fucked, because you have to wait to get back in profit to even rationalize your next position. Why 50% entry? So the reason I take 50% entry is because if the wick of a candle, okay, this portion right here is larger than 50% of the overall candle size, then I will take the 50% of that wick. Wick larger than the body. Yeah, I guess that's the easier way to put it. You don't have to do it that way. You're more than comfortable putting an order just right here. This is more than enough for good risk reward, but hey man, this is just what I do. I'm just showing you my process. That's the whole idea behind this, is showcasing what I do. And you don't have to do every portion that I do. You got to take what I'm giving you and make it make sense for yourself too. Hi, on the first entry, is it 50% of the wick? 50% of the wick is what I'm taking. Cool. Let's play price. Questions at the end, okay, guys? That's already mitigated, right? If you think about this, okay, that's already been mitigated by this wick. There's not going to be anything in here. We've already touched into it, right? Yeah, I mean, here's the thing. You could target that, but remember, this entire trade setup is based off of the 5-minute, right? That's why you use 2 time frames, is to be able to understand, because it's going to be a missed opportunity. That's all. Does that make sense? Give me a check mark if we're on the same page here, guys. Cool. Again, if you want to play very conservatively and just, you know, really make sure that you're locking in profits, this is an okay area to do that. Don't think that it's not. But based off of the 5-minute, we can see that there's nothing in here. There's nothing in here that tells us to sell. Like, really, the place that we should like is up in this region. That's where we should be targeting. Okay, so let's go down to the 1 minute. And fuck, man, we've been waiting to take this trade. I'm just itching to hit play here, you guys. Oh, fuck. Okay, cool. Here we go. So we've got tons of built-up mitigations here too, right? So what does that mean? It's going to get ran for liquidity. We need to go lower to potentially get higher prices. Okay, creating equal highs again. Okay, boom, tapped in. Okay, more often than not, you'll get tapped in on the 50% of these wicks. Again, it's just my experience with it. I doesn't mean it happens all the time, but more often than not, it does. So, would you agree that supply is in control, not in control, but the level of supply that we need to break in order to go to break even? Where is that supply zone? It's right here, right? Now, let's play price, because I really want to dive into my management on this trade. Okay, you guys are probably shitting your pants when this happens, but this is just the process, right? This is the process of a change of character. When you see a change of hands, what usually happens, right? To use this system, need a zero spread broker, yes or no? I mean, I don't use a zero spread, but I also factor in spreads on top of my risk management here, or my risk reward tool. I'm looking to switch over to zero spread because previously, before Smart Money, about a year ago, this was the best broker to facilitate what I needed them to do. So unfortunately, in Ontario, I have a really hard time actually finding regulated brokers that allow Ontario people to sign up for zero spread. It's really frustrating actually, because there's one called Fusion Capital. They're based in Australia. They allow every province in Canada other than Ontario, and it's because Ontario has such strict laws with brokerages and stuff like that. So yeah, it's really unfortunate, but I use TO markets. They got like 0.5 to 0.7 on Euro USD. Spread hours, I think, is a little bit higher, but yeah, there's some unregulated ones, Dominion markets and stuff like that, Roger Banks and Uncle Ted, or whatever the hell his name are, or is rather. I know they got a zero spread one, but I don't really trust those guys, to be honest. Yeah, FTMO's got good spreads. They're like a 0.2 pip or something. I'm going to be doing a challenge in the next couple weeks. I didn't try Vantage. I fucked around on their website. Anyways, IC is not available in Canada either. Let's. I'm going to keep going. We'll save this stuff for the end of the session, guys. We'll talk about it shortly. Okay. So let's just kind of screw this over here and see what happens here. So, like I said, we're talking about management here. I mean, this is what we need broken, right? in order to even consider managing, because otherwise you're just prematurely taking break evens. And for what, right? We got to let this trade play out. Okay. So at this point, where is demand in control from? There you go, Pete, you got it, man. 100%. Cool. Does everybody understand why? Okay, so let's talk about this, because this is important. Let me get rid of the drawings, okay? And this wick has already been touched into by these two wicks right here. So if we came down here, okay, and we broke this level, okay, if we're at break even and we break this demand level, what does that do? That allows us to be set up to now take the short to run these lows, okay? So you got to think about this in terms of mitigations. Mitigations don't, I don't know what, and it's not to condone or condescend any of the previous mentors or the not even misinformation, but maybe misinterpretation. If we've mitigated something even 5%, the chances of us mitigating it again and making a new high deplete drastically. Because if the market has collected the orders from this level already, why would it come back down here to collect more orders to go up? That's so, yes or no, does this make a little bit more sense to take this? Okay. That's the one. This is the one we're looking at, the inside bar. Now, if you want to, and if you're worried, so here's where real refinements happen. If you think about this, this is technically, kind of screwing up with this inside bar, because we've already seeked orders this high as well. So if you think about this in terms of, okay, well, what's actually going on, and you're not sure about these wicks, what should we do? Anybody know? Exactly. 5 minutes. Cool. Yo, sick. You guys are on it. I love it. Awesome, awesome, awesome. So let's do it. Let's check it out. What's going on the 5, right? Okay. Anybody want to draw this out? If you don't know how to draw this out, like, please just leave now. I'm just kidding. Where's demand and control from? Draw it out. Done deal. It's this right here, right? More importantly, it's the wick, right? But the POI is going to be here, right? Because you got to remember, this whole trade idea is to take a long up to here, and then we're expecting to see a reversal. Remember, that's what the whole idea is built around. So where can we expect, as long as one of these candles doesn't wick into here, in a perfect world, and we have an inefficient market going up to here, yes or no, that we will come back down to this POI and look for a change of character to run the high. 100%. Formulate the narrative. This is like, I don't say this as a joke. I don't say it to be abstract. I don't say it to be different. I say it because it works. Okay, you need to be able to consider what is going on within the market at all times. Let's go like this, and you have to have something that makes sense for both sides of the market at all times. Okay, so let's look at this. Okay, I'm going to just back this guy up over to here for now, because we don't really need it right this second. This is going to be more for later. So at this point, ultimately demand is in control still from this inside bar. Could you move this stop loss to break even since we've broken the high? 100%. Why not? Because if this demand level right here breaks, we already know that this is a refined order block from the 5 minute. It's not a POI, this is the refinement, right? So let's move our stop loss to break even. Okay, so play price, right? Ultimately, the block within the block is right here, right? So if we don't respect this, would you feel comfortable? And I want to know seriously, if we went like this and we broke below this, would your mindset switch to short or not? It better. It better. Because we don't need to go here to go down. What we do need to do is adapt to the market. Okay? The market doesn't have to do anything you want it to do. What you need to do as an operator within this space is constantly adapt to your surroundings. Would I set a trade here? You could. Would I personally? Because we are heavily counter trend, I would not be scaling in until I saw the second confirmation, which would probably happen realistically the next trading day. This is where I'd be looking to scale in kind of like this. Like when we established our bearish trend here, okay, we came up, we tapped into the supply, we broke down. This second tap in right here is when I would start scaling in and only targeting down here. So there would be hundreds of R available in this area, and you'd be able to catch every single one of these just through the process of mitigation. So I'm fussy when it comes to doing it off of the original change of character. I want to see where we're going to go to, because I'd like to play the shorts down into the POI before taking the initial scale-ins, if that makes sense. Just see no flip or chachi used much. I use them all the time, but I don't use them on change of character. You know, I need to see, like, ultimately changes or flips are continuation patterns, right? We're looking for demand to supply flips. Like, it's like, that's what we're doing. Now, I couldn't take this demand to supply flip because we're reacting to demand, right? Otherwise, if this demand level didn't exist, I would be looking for sells off of this. Everybody with me? Cool. Okay. Personally, not putting one here. Do you guys want me to put one on just to see how it goes? Yeah? Okay, let's do it. I mean, ultimately, demand's in control from here, right? So, like, there would be no reason that you couldn't. So let's do it. Okay, 1 to 7 meets all the requirements for my trading plan. Okay, come down. And okay, so we're starting to push away now. So if we break the high here, demand is no longer going to be in control from here. It's going to be exactly. So I'm take this order off. Well, I mean, you don't have to take the order off, but I'm just going to get it out of the way. And that's a candle break. Okay, 100%. So this order comes off because demand is no longer in control from this level. It's now in control from technically this wick. So you could put an order here. Absolutely. If you wanted to, and you wanted to scale in this early in the game, by all means. But if you guys know anything about changes of character, you know, we could come all the way up like this. You know what I mean? Then you can start taking all of these and targeting the equal highs or new highs or whatever you guys want to do, depending on the analysis for the given pair at the given time. So let's start playing price through. Ultimately, at this point, stop losses move to here. Okay, very basic stuff. Why? Well, because if I manage here and we break through here, what are we looking for? Bingo. Right here. Cool. So play price, stop loss here. Okay. So at this point, once we break this high, we can manage again. Okay. Where are we managing? %, right there. And again, this poses the question of scale in. Could you? Why not? You could. Personally, I don't. I want to see a little bit more confirmation before I take scale ins. But this is criteria. You know, if we are pro trend right now, we've established, we've taken out the high of the previous bearish leg. This is scale in opportunity, right? Reacting to supply, pulling back is kind of what I would be looking for. Okay. So play price. Okay, we tapped into demand, pushed away, management here, right? This is the last place demand kicked in. If we go lower, it's change of character, right? Doesn't need to tap into here. Play price, okay, demand. Okay, so we're like 9:10 in the morning. So we're like an hour into New York, and we are up 17 R. We still got 2 hours left. You guys want to keep trading? 100%, you better be. Why wouldn't you? Take every fucking trade that fits your plan until your time limit's done. If nothing fits your criteria, big deal. Just keep playing. That's the name of the game. Get on the bike. So, what are we expecting? If demand is in control, we're in control from here. We're in a supply. If supply takes out demand, what are we doing? Taking shorts, right? Never marry your bias. It's not about bias. It's about reacting to the market. It's about reacting to what's available to trade. If you guys have a pen and pad, I want you to write this down, okay? If I had to take a trade right now, okay, I had to formulate a narrative right now based off of what I have marked right now. What are the available trades to take? That's what you need to have written down. What are the available setups to take given where price is right now? Okay, option one is we go like this and we break all of these. We take this as demand to target higher time frame supply. Option two is we fail demand and we take a sell. Are there any other options that I'm missing? There's either a buy or a sell here. Given, like, there's nothing else. It's so fucking, like, don't make something complicated that is not complicated. Because I'm telling you, in order to be successful in trading or really any aspect of your life, it's getting down to the root of what's available to do. Okay, cool. So play price. Let's map the demand level. Everybody okay with this demand level here? Pretty simple. Just erase your stuff, please. And here we go. Play price. Okay, we've literally smoked through this. Okay, it's no good. Didn't do fuck all for us. But this is still the demand that's in control. So I just peeled my stuff over, and it's still this down here because it's unmitigated, right? If this was mitigated, I would say maybe one of these wicks. But because this is not mitigated down here, this is the level. I don't know who's got this here. Clear drawings again. Okay, so play price. So remember, the entire time we were talking about this, we were expecting that if we come up to this level, this is very close to a double top, okay? So where's the sweep zone? The sweep zone is in here. If we blow through both of these, then we're looking for longs at this level, and we can start looking for scale-ins. Okay, get a reaction. Okay. Where's demand? Good answer. Good answer. Okay. So there's two levels of unmitigated demand here. Okay. Let's play price. Can't take a demand trade while we're in supply though, because the only target we have is here. Cool. Okay, so we're in supply. Can we take this trade on demand? No. Can't. Because we don't know if supply is going to take control of the market. if we pull back like this, okay, if we pull back like this and we break above demand, if we would have, if this candle didn't exist right here, this black one, and we just pushed through, could we take this demand trade? 100%. Yes, we could, because that shows that supply was disrespected and we could take this. Oh, you're asking about this small wick. I mean, okay, subjective, I guess. You know, we do have a series of mitigations. So this is where, you know, this is the origin of the move. You could either, if you wanted to put a limit, there would really be no harm in doing it, I don't think, because ultimately, let me just look here. Yeah, it might be. You might be correct, actually. It might be better to actually just take this one. This would be maybe ran as inducement with relatively equal lows, and then come down here and we have a small portion of mitigation. So, I mean, yeah, it might be better to just wait for this. And if you're uncomfortable with setting limits after breaking through demand levels, what would you wait for? You'd wait for the change of character to then take this to take out the high. Okay. Supply price, see what's going on. So demand, I guess we could say, is potentially in the market on some sort of lower time frame at this level. Okay, we tap into demand. Supply is in control from this level. Okay, and let's play price. So we're caught between the two. We start reacting to supply, and then we break through. Okay, so what? Yeah, exactly. So I would probably refine down to this one. But here's the thing, demand is right here. So if we pull up to here and go down to here, this is the only unmitigated level that we can take, right? Because we can't, even if we're thinking we're gonna come down to the POI, there's no guarantee that this won't bounce through like this, right? So should we take this trade or should we wait to see this trade? I like this one. Personally, I like this one. And doesn't mean you can't take this one, but here's the thing. There's no guarantee that this demand won't produce a new high. Okay? Yeah. So I'm just going to play price and we're going to see what happens. So right now, same thing though. Supply is in control from here. This has mitigated this. We're not coming up here. If we come up here, you know what this means? It means we've got relatively equal highs. We're going to sweep again. Be prepared. Know where you're at. And if you're not sure where you're at, 5 minute. Okay. If you're not sure on the 5 minute, 15 minute. If you're not sure on the 15 minute, get off the charts. Okay. If you need more than that information, then this style is not for you. Okay. Full transparency. Let's go. Okay, tap in, get the reaction, supply, right? Let's map this out nicer. Let's pull this over here. And supply is here. Okay. Oops, I'm going to go all the way down here. Okay, so ultimately, if right now, because we're reacting to supply, we can't take the demand trade. Now, if we break this supply and come back down here, could we take this demand trade, even though we didn't break structure? 100% we could, because that shows a change of trend at a demand level that broke structure originally, right? So that means that this supply level failed to take out demand, right? Okay, cool. How you guys liking this trading strategy, by the way, for anybody who's like been around? Awesome. Yeah, it's, you know what, it's really tough to fucking beat this. It's really tough to beat this. I don't want to pump my tires. I am the product of all of the mentors that I've had, and dude, this has been such a game changer for me. I'm hoping we can change a lot of lives with this perspective. I've got goosebumps all over my body right now just thinking about it. This is almost like a tearjerker moment for me. It's just been phenomenal, and now I get to kind of show you guys the process, and it's been awesome. So listen, I'm going to answer questions at the end. Okay. I know you guys are all excited because I gave, I gave you an opportunity to voice an opinion, but let's get through this. We only got till, 11 right here to take trades. So I just want to show you what's available. And I really wanted to just hone in on this day because it just showcases the strategy so well. Okay. So look at, we're in demand. Okay. We've swept equal lows. Okay. I want to know how many people that first get into smart money concepts. So think about yourself when you first got into smart money concepts. Would you be taking this long? Guaranteed. Guaranteed you would, because you wouldn't even realize that this supply is in control from this supply, right? So you'd be looking for this. But this only gets validated if this candle broke above here. Okay? But these are the things, man. These are the things that nobody fucking, these are the little details that you need to make sure that you're dialed in. Supplies and control from here, okay? See how I'm talking to you guys right now, doing these webinars? I do this all New York. I do it to myself. I literally fucking talk to myself all through New York like this, and this is why I can crush it every fucking day in the market. Okay, where's supply and control from? Bingo. Okay, get rid of your stuff. That's demand. And this is, no, that's nothing. I mean, ultimately it would be in this level right here, but this didn't break structure. This is the one that broke structure. We're not expecting demand levels to hold. And if you're unsure about this, what do? 5 minute. So mark this out. Okay, let's go to 5 minute, see what's going on. Does that look like anything relevant for you to trade from? Or does this look more relevant? Cool. Not to single you out, man. Just want to make sure that we're all on the same page because that's what this is about. Okay, so supplies and control from here. Okay, we've failed demand from that level. Where are we targeting? Done deal. I wouldn't refine, and here's the thing, we've now broken structure. We've completely broken structure. It may be a sweep, but realistically, if we tap into a demand level, do we need to tap into, after everything we've just talked about in terms of mitigation, do we need to fill the 50% of this? No, we don't. Could we just tap this and fuck off? 100%. So if that's the case, and by that logic, would it make sense to target this or this? Cool. This guy. Okay. Okay, let's play price. Now, before we do that, let's put an order here. Okay. 2.3 pip stop. For those of you who know me, is this good? 3.74 and 2.3? I don't take those trades. So what am I doing? Very simple. I'm just taking the 50%. And if I don't get tagged in, I don't really care. It's not going to make or break my day. I'm up 17R. You know what I mean? Like these are the risks I'm willing to take at this point. Okay. And then guess what? So what are the two options? What are the two options when we come to here in terms of bullish and bearish scenarios? Draw them. That's right. There's this or there's this, okay? So are you prepared to take a trade in either direction? No matter, it doesn't matter what happens. It literally doesn't matter what happens because there's going to be a trade available. Agree or disagree? Check mark or X? 100%. 100%. This is called perspective shift. This is about understanding how markets work. This is how they collect orders. Fuck your bull trend, fuck your bear trend, fuck your order blocks. It's about where demand steps into the market and where supply steps into the market, nothing else. Okay? Look at pro trend, counter trend. Now this is counter trend to become pro trend. It doesn't matter. We don't even know where the market, it doesn't even matter what's going on. It's about understanding where the market could go, right? So let me just move this back over, okay? Right around this level here, like this. And oops, there we go. Yeah, cool. Around the 50%. Okay, so we're tapped in just to show you guys. So stop loss at break even. When are we doing that? Market. That's it. Cool. Now, because we're counter trend, do we need a wick break or a candle break? W or C? There we go. Cool. Wick break is no good. We're counter trend, right? So we get the push. Can we move stop loss to break even yet? Nope. Why? What's the level that's affecting us right now in terms of supply levels? Supply levels. Exactly. Exactly. So you're going to risk getting stopped out on a counter trend move, right? It doesn't make sense to do it. Cool. Okay. We've mitigated the wick, right? Are we expecting it to come higher? Potentially. Could come deeper in, but really it shouldn't break that level. So soon, what level do we need to break right now? Okay, perfect. Where are we managing right now? Done. Awesome. Awesome. Cool. This and play price. Okay. Bingo. 1 to 7, 1 to 12, 1 to 5. Still got, or is 11? Still got like an hour left of the session. Do we stop here or do we keep going? Keep going, right? Why would you stop? You just trade your rules. Trading's boring, man. You just keep trading your rules till it don't work or your time runs out. Keep it going. Keep it going. Don't stop. There's no sense. Okay. I don't take any partials because where people would normally take partials, we're taking profits. Why? Because when you take profits at these levels, you are able to reevaluate whether or not we are going to have a bullish reversal or a continuation to the downside, which would be a demand to supply flip that breaks the entire demand level. Okay. Get in and out before everybody else does. Why? Because you're a step ahead of everybody else that way. You're able to reevaluate exactly what's going to happen at these levels. And if you're not able to do that, then just sit back and wait for confirmation entries at all these levels. Yeah, well, anyways, I have my own, I guess, opinions about prop firms and all the bullshit that goes on behind the scenes and stuff like that. I've had personal funding for the last 4 years, and it'll be tough for me to even consider taking an FPMO, but I want to do it live with everybody on Instagram and via the Telegram and stuff, just to get the haters really out of my face, telling me to post lot sizes and all this. Anyways, whatever. It's a story for another day. Couldn't care less, to be honest. Shouldn't have marked that. I guess you guys know, where's supply and control from? Inducement. This doesn't break anything, right? This doesn't break anything. It's this level here that broke structure. Okay. Cool. Get rid of your drawings, guys. Thank you. So if we respect this and then break down, we cannot take this trade on a limit order, right? But what we could do is if we came up to here and we saw a change of character, could we take this short? Yeah, I mean, yes, you could say that it's mitigated, but like, I mean, ultimately, can you give me a second here? Let me get rid of this stuff. Get rid of your drawing. Yes, there is a partial mitigation. You're right. I guess you could say that technically supply is in control from this level. This wick here is unmitigated. So I would probably even refine this at this point to this wick right here, which would essentially equate to a break of structure at this point. So the reason I could say that is because Yeah, I mean, like this doesn't really do anything. This doesn't really break any substantial level. So if you want to just refine this down to the wick, more than enough. How do I mark the inside bars? Indicators, anybody who wants to do this, type in inside bar V2 and you guys can change your parameters on your own. Okay. Okay, no more questions right now, please, guys. Let's keep moving forward here. So right now, if we did this, broke down like this, then we would move our supply level to here, right? To be able to take a long trade. But right now, all we have to deal with is this, okay? Until we see a sweep. And if we don't see a sweep, that's our level. So play price, okay? We're respecting supply, okay? To a certain degree, but now we're also respecting demand levels, right? So we're caught between demand and supply. We're battling it out, the exchange of money. So we've now broken a supply level, okay? So here's the thing. If we've broken a supply level, okay, I want to ask, is there a trade available in this right now in terms of mitigations? I don't think there is. And the reason why I don't think there's a trade here is because, yeah, you could, the only thing I would look at would be this wick, okay? Because this is already mitigated, this is already mitigated. And realistically, if we break below this wick, what are we doing? Or go to the 5 minute. Exactly. Go to the 5 minute. This has already been partially mitigated, right? So you could potentially take the wick, or you could take this wick. Ultimately, we're still waiting for our, we're still waiting for this to break, right? That's what it boils down to. We're waiting for this guy right here, oops, to break. Okay. Play price here. Okay, so we've broken. Now what? Interesting. Okay, so get rid of your drawings and let's talk about this, because this is a really important one. This is how people get fucked on the wrong side of the market. Whoever just circled this wick, you've nailed it. And I'm going to show you why. Okay, this here, okay, you could say, yeah, we've broken structure from here. You know, it's more of a pause in the market than anything else. This has been mitigated, right? This has been mitigated. We have, what's this right here? 100% it's liquidity. It's equal lows, right? How comfortable would you feel taking it off this wick? Cool. Yeah, I mean, I don't even look that far. It's ultimately like the only thing that this boils down to is that we've broken structure. We've broken this level from down in this region. This has been mitigated. This has been mitigated. The only place that resting orders sit are in this wick. Process of elimination, right? This is not a valid enough demand level, in my opinion. And I would feel more comfortable coming down here. Okay, so let's look at this. Let's draw it out. Okay, demand. Okay, so with this one, because the wick is equal or lesser than the entire candle to 50%. Oh my God, words are good. Jesus Christ. The wick is not more than 50% of the candle's entire length. So I would not be taking the 50% of this one. Okay, I would just be taking this guy right here. Now, let's zoom out and talk about a target. Equal highs, probably a good start, right? Personally, I'm looking at equal highs. Why am I looking at equal highs? Look at what time it is. It's 11 o'clock, right? It's almost 11 o'clock. So what am I looking for? I'm looking for an easy out to get out of the rest of my day. That's all. Nothing more, nothing less. I'm targeting equal highs. I'm not even targeting above. I'm literally targeting this wick because we failed to break demand from this wick. This high is going to be weak. You could easily target, you know, maybe something in here, but for the extra R, I'm not really that concerned after the day that we've just had, and I'm looking to cut all of my stuff off at 11 anyways. Okay, so buy price. Okay. Okay, respecting demand. Okay, as soon as we break this high, where are we managing? Done. Yeah, we're reacting to supply, but supply couldn't take out demand, right? Supply couldn't take out demand. So what does that mean? Demand's still in control. Okay, where's demand in control from? Right there. What are we expecting? Okay, you get the point. It's pretty well up for the webinar, guys. Just wanted to show you, rather than doing like, you know, fucking 7 days of back testing, like I think it's a lot more reasonable, and I think you get more out of it by literally dissecting one 3-hour session in trading than you know, multiple for 15 minutes. There's so much more attention to detail this way. So you know, check mark if you agree, and if you don't, let me know. Cool. Yeah, so when we're pro trend, so like, okay, so let's talk about a scale in opportunity in terms of, let's say we broke down, oops, let me get rid of all this shit. So let's calculate all this first, okay? Somebody want to pull up their calculator here. So 8.5, we'll call this 8, 8 and 7 here. So 8 and 7 is 13, 8 and 7 is 15. Right? Yeah, 8 and 7 is 15 plus 12, that's 27 and a half, 32R. So 32R. Was this just a super good price action EU day, or is this a typical, so you know what? I'm not going to beat around the bush. This is a really good day. This is like a really, really, really good day with EU. This happens about once a week where you can get this. I would say that the average R per week that I can, average R per day is about 10. And this is just being really fussy with trades. So some of these, so this guy was pro trend, right? So this would have been a 1% trade. This was a counter trend. Okay, so this would have been a 0.5%. And then this would have been counter trend because we broke this high. So this would have been 0.5%. And then this would have been pro trend because it's in the direction of demand taking out highs. So pro trend, counter, counter, because this was only confirmed as not counter trend when we broke this high. Make sense? Yeah. So that's basically it. The only time I'm looking for scale-ins at this point now is, okay, we start taking out highs again up in this region, and we respect a demand level, then I'm expecting to, you know, come up into regions up here on the higher time frame. I'm not going to get too far into that, guys. It's like yeah, 10 to 5 here. Like, I'm going to eat dinner soon, but give me a second here, and I'm going to open up for a few questions. I'm going to answer like 3 or 4 questions. How much percent usually is your risk? Master, any news on Discord? So you know what? So I'm not actually going to open mics, or I'll open the mic to 3 questions. First 3 people with the hand up. Pete, you're number 1. Alfonso and Ali's. That's it. So don't bother putting your hand up now. So Pete, you can start.
What's going on, man? Awesome session, and thanks for doing these, by the way.
Awesome.
Yeah, just a quick one. Basically, I was wondering if we're coming into an area of supply, and price. You know, we're looking for obviously the 2 things for it to react and give us a change of character, or to break through and fail. If we break through like that, demand's in control. But if we get a change of character here, and there's no real supply up here, are we okay to take that, or what's your kind of thoughts on that?
I mean, ultimately, like the higher reliability is always going to be if we're in a higher time frame supply zone. But nonetheless, if we start failing demand levels, like significantly from like, let's say a smaller time frame supply level, then get on the supply side of it and ride it down to the next demand. So if your risk reward is there down to the next demand level, then there's no problem doing it, right? But if your risk reward is not there, then you just wait.
Mm-hmm. So like usually you'd look for your chock after it reacts to supply, but if it breaks above supply and gives you that chock, you'll still smash it.
Why not?
Cool. Yeah, because I was kind of hesitating when I saw that last week. I can't remember what day it was, but
it just boils down to the risk reward. If the risk reward is there and like it meets your risk parameters, you know, in my case, 2 pip stop loss or less, and at least a 1 to 5 risk reward, I'm taking any trade that fits my trading plan.
Cool. Cheers, man.
Okay, man. Elise?
Hey man, I hope you're doing well.
Yeah.
I don't know if this was the same question that Pete was asking, but on Friday, I would say
Okay.
it kind of broke the origin of the 15-minute origin where the move actually happened. And I
Okay.
was looking for you know, continuation trades, but I got stopped out. Now my question is, once it breaks like the origin of the move, does it would you wait? Would you take like do you get a deeper pullback in that case? Like, can you take continuation trades from there, or do you get
Well, I think I would need to like see the example. The other thing, was there news at all?
No, there wasn't. It was on Friday. So if
I
you
wasn't
can,
trading Friday at all. I had a wedding.
oh, okay. Yeah,
Okay.
because basically it just broke to the upside. It broke the supply level to the upside where the origin of the move happened.
Okay, so
And
yeah.
yeah, I was looking for something like that, but it actually made a deeper pullback. Yeah, and then it respected demand from there. So I was my question is, if we do break like the swing structure or the origin of the move, is it
Yeah.
better to wait with a deeper pullback?
So here's the thing. You got to be looking at this too, right? You know, toggle back between the 5-minute as well. And yeah, man, it's as simple as this. Like, I mean, you saw my move on Thursday, more than likely, where I got stopped out twice. And all it meant was I was on the wrong side of the market. I was swinging for something that wasn't going to happen. And, you know, just flip your bias if that's the case. Right, in the short term at least. And if you understand where your higher time frame POI is, let's say it's down here and your decisional was here that you got stopped out on, well, all of a sudden now you can look for a supply trade coming down here, right?
Yeah. Yep. No, you're right.
That's the beauty of this strategy, is it's so malleable, and it's malleable in a sense that, like, you know, you just adapt to your conditions, man. And if it means taking an L, just take a step back and say, okay, well, why did we break this level? Okay, if we're in supply, let's say we've broken this level, let's take this supply trade down to the next POI, right? And then wait for the change of character to then target the equal highs.
Yep. Okay. Yeah, you're right. Thank you. Yeah.
Awesome.
Thank you.
Thanks, man. Afonso?
Hey, what's up, bro?
Hey, how are you?
Good. All right, so I guess our question is more like general, but for the past week, so we're in Europe, so we usually trade London.
Yeah.
And what we saw from the past week is that sometimes price moves a little bit different, as in like sometimes it gets stuck between supply and demand zones for like 40 minutes, and after that, like it usually like breaks supply and then breaks demand and then sweeps from there and whatever. So my question is, like, do you think that it's possible for price to move like differently according to the different time zones?
Well, I'm gonna say this. It happens in New York sometimes too, and what it means is if your criteria is not being met and it's sweeping to both sides, and you get taken out at a couple break evens in a row or whatever your parameters are to take the rest of the day off, then that's all it is. I mean, ultimately, the rules of supply and demand never change, because ultimately supply and demand are the godfathers, and liquidity is like the evil cousin. You know what I mean? Like, liquidity is going to rest above all this shit. And if you understand that, you know, like, we've created equal highs and stuff like that, and we're sweeping to both sides, constantly creating ranges, we'll play the range, right?
Right.
Does that make sense?
Yeah, it does. It's just like so frustrating because, like, according to our time zone, we usually trade, like, it's better for us to trade London, but as soon as we backtest New York, it all seems like so clear and so like easy. And we're like, what the fuck is going on? Like London is not like this. So we're like frustrated, you know.
In my experience with London, at least in my backtesting days, I've never really traded London. I'm not that much of an early bird. It is very sweepy. It tends to sweep quite a bit more, I should say. And yeah, that's, I mean, the same principles still apply. It's just, I think liquidity kind of stands more at the forefront than anything else. So it is a little bit of a different, but again, this happens in New York as well. Like, look at, like right now, if you think about this too, if you're looking at this New York session, it's the same thing. Like we've literally just swept. We've also swept here. You know what I mean? Like into this, like it happens all the time. It's just a matter of, and I think this is where realistic expectations come in, because if you're just targeting the next unmitigated demand or supply level, sweeps won't really matter, because as long as your risk reward is there to go to that level, you can still get in the trade.
Right.
You know?
Yeah, we took a bunch of break-even trades last week. That's why I'm asking, because it was like a weird week for London. I don't know why.
I mean, there could be, like during London too, I'm not really in tune with what news is going on. It's more so just during New York. So if there is news that's going to ping pong you around, or there's no news and it's going to keep you range bound, you know what I mean?
Right.
Like these are all contributing factors as well.
Right. All right, awesome, man. Can't wait for your masterclass, bro. Awesome work.
Looking forward to seeing you guys.